You're listening to The Real Wealth Show with Kathy Fedke, the real estate investor's resource.
There's been a lot of talk about potential tax changes under the Biden administration. On today's show, we're going to discuss what hasn't passed and why, and what's still on the table. I'm Kathy Fedke, and welcome to The Real Wealth Show. Our guest today, Amanda Hahn of Keystone CPA, is a tax strategist and real estate investor. Her goal is to help investors with strategies designed to supercharge their wealth through tax savings. They also have a top-selling book called Tax Strategies for the Savvy Real Estate Investor, and Amanda is here on The Real Wealth Show to give us some insight on what we can expect coming down the pike. Amanda, welcome to The Real Wealth Show. I cannot believe you are joining me on tax day.
Thank you for having me. What better day to talk about, proposed tax changes than the day when people are paying taxes for last year, right?
And maybe a good question to ask, how do you run a business? You must run a very solid business that you could be here with me when I'm sure you've got lots to do in the office.
Yeah. We have a good team of people who help with everything, help everything Matt and I do on a daily basis. So that's definitely what allows me to be here. But, also with our clients, we do a lot of proactive planning. So, try not to have too many surprises or last minute things. Usually tax deadline day is not as stressful as, maybe some people tend to think.
Well, especially if they're maybe doing it themselves and don't have a good tax planner. Yeah. Realizing, I got some bills to pay. All right. So let's jump in. There's a lot of questions about whether or not the tax law is going to change under the Biden administration. Nothing has really changed yet, has it?
No, thank goodness. And it's really interesting because, I think for the second part of 2021, we were all just, paying so much attention to all these proposed changes that were supposed to happen, a lot of them targeting real estate investors. And then we sort of had a mini celebration, towards December when we realized that, hey, a lot of those were left off of the bills that were being voted on. And, even better, right, as we headed into the actual end of the year, none of those proposed changes got any momentum to pass. So it's like, hey, everybody relax for a little bit. But recently, in March, the Biden administration released their 2023 budget. And part of that budget includes some proposals. Once again, it's really interesting because, a lot of the ones are familiar. It's like, hey, ones we've been looking at, we celebrated because it went away. And now it's like back from the dead again.
Yeah. Okay. And so what are some of these zombie tax laws that are coming back from the dead?
Yeah. I mean, a couple familiar ones and I think some new ones as well. Right now, what they're talking about or considering within the budget is to increase the top tax bracket again to 39.6% for the wealthy. And the wealthy is defined as single taxpayers making over $400,000 or married filing joint people making over $450,000. And so not only is the tax rates going up, but it's going to impact a lot more people who are currently at, lower rates. So that's something pretty detrimental. Over the years, you probably hear people talk about the marriage penalty, like, why we tell people not to get married. Here's a great example of that, right? If you're single, you can make $400,000, but if you're married, it's not $800,000, it's only $450,000 together. Wow. You start paying higher. So you could literally have, a spouse where one person makes $200,000, the other makes $300,000, and all of a sudden you're at the 39.6% bracket already. So, I don't know, for any young people, think twice before getting married, maybe.
Oh no, that's sad. That's sad advice. But yeah, maybe on a year where you're both making a lot of money, and many young people are with wages increasing. I bet there's lots of young couples that would like to get married that would fit into that over 450 range.
Yeah. And the thing about, just for anyone who's considering getting married, it is looked at the end of the year. So it's not like a prorated amount, like if you're married middle of the year. So, we do have, sometimes we've seen clients, especially a lot of people who maybe in the tech industry, that had, significant event with their stocks or something like that, that moved them to a higher bracket, to maybe even delay the wedding date, right? Just from December to January the following year, then you'll still be part of that single taxpayer. But yeah,
Well,
that's
you could have
something
a great wedding. You just don't have to sign the paperwork till the
legally,
next
right?
year.
Yeah, yeah. And so that's something, we're really hoping will change, if there's sort to be enacted, with inflation and just with the kind of the unfairness of it all, at least, for the married filing joint to have a little bit more than a $50,000 bump, right, before you get
Yeah,
to the, super wealthy 39.6% bracket.
got it. What else should we be aware of?
Um,
The zombies.
the zombies. So last year, I mean, for real estate investors too, or just people in the stock market, part of the proposal initially was to increase capital gains taxes.
Mhm.
Currently for high income individuals, the cap is at 20%. So the proposal is to turn that into ordinary income, which would be, at the highest, right now, 37%. And this would be a little bit higher thresholds for people making over $1 million of taxable income. But this is also something, for people who are in real estate, right? It's not uncommon, especially if they have a taxable event from a real estate sale or something like that, to have it be above that threshold. So that's something that's pretty, detrimental, especially for people in real estate and have significant stocks that's gone up in value too.
But like you said, some of these things were on the ballot, but didn't pass. What do you think would have it potentially pass this time? Sometimes it seems like they sneak it in at the last minute, and sometimes the politicians don't even know it's in there. So, I mean, how do you see this, playing out? And does it have a chance to pass this time?
Gosh, I'm not a betting person, but if I were to bet, I think probably a lot of this will not pass, just because there really was a focus to try to get this passed last year, and it, kind of didn't work. And really, the political landscape hasn't changed too much. One of
Mhm.
the other proposals, that's sort of a little bit more ridiculous, was that there's going to be a brand new 20% minimum tax, what they call on the wealthy individuals for unrealized gains. This is one that, when the thought of that first came out seems totally ridiculous. It's basically the government saying, hey, we're going to assess you taxes on appreciation of your assets, regardless of whether you sell them or not. So literally, if like my real estate went up, I could likely pay taxes on it, even though I haven't sold, I haven't locked in those gains. And so that's also part of the current proposal. It's called, I think they call it the billionaire tax or something. And what I thought was really interesting is, if something is called a billionaire tax, my assumption is that it's assessed on billionaires, right?
Mhm.
But it's actually not. It's actually on people with 100 million or more in net worth. So it is considered a billionaire tax. And one of those things is, talking about how likely is something like this to happen. I think administratively, it just would be nearly impossible to try to figure out. You have to reevaluate your assets year and year again and pay taxes on the appreciation, or what happens if it goes down in value. So, the concept of it's like, hey, we're going to now tax people on all this wealth they've built up, but how are we actually going to do it? It's going to be essentially a nightmare. And of course, there's already people in DC who've come out and said, no, this is not something that we're supporting. This is sort of not the way we want to go. What I thought was really interesting is there's a website called taxfoundation.org. I don't know if you've ever checked it out, or it's only for like tax geeks.
Well, I
Uh,
haven't checked it out, but maybe I should, because I was very upset with our lack of tax planning this year personally. I need to talk to you more. Just wrote a really big check. Oh,
Oh,
yeah.
yes, yes. And it's difficult, because tax law is ever changing too. And so as the law changes, our strategies have to change as well. But yeah, the taxfoundation.org, it's interesting. So when the budget came out of DC, then what the tax foundation's job is they look at the proposal and they figure out, okay, does this make sense? Is it going to help our economy? Is it really going to help reduce the deficit? And what they've said, and you can read this on the website, is that the new proposed increases would give the U.S. the highest top tax rates for individual and corporations in the developed world. So that's something really interesting, right? And one of the concerns is with inflation, with higher taxes, it could really slow the economy as a result, instead of the intended, right, the intended goal of making everything better.
Mm. Some people say that the creation of money by the Fed, the increase of the money supply, is like a silent tax because it creates inflation. And then it's across the board. Everybody's paying more for everything to create those dollars. I mean, do you agree with that?
Yeah, yeah, definitely. I mean, we've seen even, just even going to like fast food restaurants, right? I don't know if you probably experienced the same thing. Has increased, from the smallest things that we're spending money on a day-to-day basis. And it's, just as a result of what's going on right now. So yeah, I definitely agree with that statement.
Yeah, I just feel like the more awareness that is out there about what's really happening and how taxes are really being collected, which is, politicians can offer these benefits to people, that people want. And people think they're getting it for free oftentimes, but really it's a silent tax of inflation. And when we become aware of that, when we're all upset going to the store and seeing that prices are up, and wanting to tax the billionaires, and maybe we need to look somewhere else at what our government's doing and how
Yeah.
they're spending.
Yes, and it's interesting because we always talk about income taxes, right? And specifically, we talk about federal income taxes for the most part. What you and I were just talking about, from 37% to 39.6%, or capital gains. But there's so many other taxes we pay, and that's why there's research that shows taxes is actually probably our single biggest expense
Mhm.
in any given year. And for those of us who are lucky to live in beautiful California, our state tax rate at the top is now over 12%. So that's on top of the federal rate. And now there's talks of California having this new fix and flip tax that I'm sure you're aware of, which is that if you sell a property within 3 years of buying it, there's now a brand new tax. Well, I don't I don't want to be misleading, not now, but if it were to be passed, there would
Mhm.
be a 25% tax on that profit, in addition to federal, state income taxes, payroll taxes that you're paying. So pretty scary if you think about all those, right? On
Well,
top of
also it's terrible for the housing market where prices are already high and it's already unaffordable, and now people would not want to sell. Why would they sell? They're
yeah,
going to pay that kind of tax, so you'd have even less properties on the market. Just got to think these things through, people. Oh man, there's
yeah.
just always, again, there's just always this desire to take money from people who appear to have it. And certainly billionaires have money, right? And how they got there, well, they all got there differently. But even if you taxed all of the billionaires and all the multimillionaires, it wouldn't come close to the silent tax that we're all paying. And
Yeah.
really, the people affected the most are on the lowest income level. They're the ones affected by everyone's affected by inflation, but it's really hard when you're on a low income or a fixed income. The elderly, inflation eats it away.
Mhm.
And it's really the government we should be angry with, not the billionaires, because with the government, we're talking trillions, which you could not collect from billionaires, no matter how
Yeah.
hard you try. You're not going to get your tax income that way.
Yeah, and I think it's really interesting to the increase in tax rates, sort of discourages, right, discourages the wealth building and all that. Versus there are a lot of good policy as well in the tax world, and for me, as a CPA, I do see it firsthand how a good tax policy really drives the economy and drives investors and business owners to do good things. For example, right now in 2021, we still have 100% bonus depreciation, right? So if you're someone who invests in real estate, certain types of additions, improvements, of furniture and appliances that you're putting into your rental properties, we get a bonus depreciation to write off 100% immediately. And so we work with investors all the time, and they're thinking, hey, I do want to improve on my properties. I do want to make things better for the tenant because I also get a tax benefit as well when I do that. And so I think there's definitely good, ways to write good tax policy that helps us to achieve what we're all trying to do, right? Which is affordable housing, getting people, in the right places and stimulating the economy. But just doing it in a way that incentivizes people to do that rather than, scaring people or having them shy away.
That is so often overlooked, is that tax policy is meant to direct investment dollars. And it's overlooked. Like, investors have money, they want to invest. Where are they going to put it? They're going to put it where there's a return. And if the government will give an even bigger return with tax incentives, uh, investors will put their money there. That's what's
Yeah.
great about opportunity zones for those who, want to see certain neighborhoods improve. You want money there. You want investors to invest there. Generally, investors don't. Hopefully, they've got a charitable program, but most of the time they're trying to make money, right? So,
Yes,
uh,
yes. Yeah. And you and I have talked about, opportunity zones before offline. And it's, we have a lot of clients that's made good money, either in real estate or in stocks or both. But primarily people who made a lot of money in the stock market that, because they don't have a 1031 exchange option, right? Can't exchange
yeah,
Apple stock for Tesla stock. So it's just going to be taxable. And the opportunity zone, like you said, is a great example of a government incentive. And it's so popular
yeah.
that I mean, as a CPA, I have a hard time. I tell people here's a great benefit of opportunity zone investment. And then their question is, well, where do I get involved in such a thing? And it's like, okay, well, then we have to shop and we have to look around. It's not like they're just everywhere, right? Because
Yeah.
it's so popular. Yeah, I love that you brought that up because that's a great example of something being done well and helping the investor as well as helping the communities.
Yeah, and just so you know, I have finally found a really good opportunity zone
Oh, good.
product, so I will
Okay.
make sure you know about that. Because it was such sort of the wild, wild west. I was being very cautious, and
Yep.
we had a few. Boy, you shouldn't look back and regret, but I do all the time. But one of our property teams was saying, you got to buy these lots just outside of Tampa. It's an opportunity zone, and they're like $6,000, and I didn't do it.
Oh,
They're like
yeah.
100,000 now, just a few years later. So, boo. Anyway, but I think some of our members did. I think some of Real Wealth members actually followed through and did it.
Yeah, yes.
Yeah.
Oh, good. I'm glad to hear that because you're on my short list of people to contact.
Oh, good, good. Okay, so the bottom line is you see all kinds of articles and headlines talking about new tax law, and people are freaking out. Well, at least some people are concerned. So you don't sound too concerned that these changes will happen, at least
Yeah,
not
I am
overnight.
concerned. Just for me, it's a lot of the unknown.
Mhm.
If we know what the proposed changes will be, once it's passed, right? Once it becomes law, when is it going to become law? What are the actual details of it? Then it's easier for us to actually plan. It's the uncertainty that kind of makes me uneasy. The earlier in the year that we know what the changes are, the better it is. Right now, a lot of these, like I said, they're part of the 2023 budget. So the earliest, theoretically, that these would become law if they were to ever pass would be January 2023. So that still gives us quite a bit of time to plan. But, will anything actually happen, get done? We don't know. And what we don't want to be is like in December of this year and still be in this unknown phase of what's going to happen. What do we do? Because, one of the other things that, came back from the dead was 1031 exchange. In
Mhm.
2021, we talked a lot about 1031 exchanges going away or being limited. And then, so that seemed to be off the table for a while. Now it's back again in the proposal where 1031 exchange potentially being limited to $500,000 per year per taxpayer. The good thing about this one is there's no marriage penalty. So if you're married, you can theoretically exchange up to $100 million worth of gain and not have to pay taxes or get to defer the taxes on that. So that's still good. But I think practically speaking, there's always tax changes around us. It's just whether we are looking at it, planning for it, focused on it or not. And as taxes change or as tax laws change, it simply means that the strategies will change, right? From the CPA's perspective, if there's higher tax rates, then we look at what are the ways to increase our write-offs. contributions to retirement accounts, maybe, right? Before it was saving us 37%, now it's going to save us 39.6%. So maybe that's even better and something I'm going to do and do a whole self-directed strategy around that. So, that's all that means, is just will change as as the rules change, we'll change the strategy, and then the investors will make different investment decisions too, based on what the law is, like you were saying, that we might not sell. Maybe we're going to just sell and exchange one property instead of I was planning on 5, because I'm not going to want to pay taxes on it, right?
Fascinating. Okay, and for anybody who is angry that we're talking about tax savings at all, because I usually get those comments in the notes, and I understand, there's this belief that investors are greedy, and some are. And so, but that's just a fact. Investors are looking for a return, and anyone would do that if you made a certain amount of money and half of it was going to the government, and there was an opportunity to invest in something rather than just pay it all in taxes instead of having the government do that thing. People will choose that. Anyone would choose that. I think where people get stuck is thinking that maybe the government can do it better than the private sector. And one example of where that absolutely did not work is where I'm sure you heard about Los Angeles trying to build a shelter for homeless. We have a huge homeless problem in Los Angeles. So money was set aside, government money, our taxpayer money set aside for, to build homeless housing. It ended up being $600,000 per shelter. Now, do you think that the private sector could have done that better?
For sure. I mean, real estate investors are some of the most creative and business savvy people that I know.
Yeah.
And government, on the other hand, is sort of the extreme opposite, right? I was recently called into jury duty, and just the whole process of being in jury duty, I was like, can we be a lot more efficient, in just weeding out people? So just from the smallest things, to be able to kind of see the difference. But yeah, I think that some people do think about, have this understanding that saving taxes is bad. It's almost like you're cheating the government. Like you can't talk about that, or that's wrong. But something that we talked about earlier, no, these are government incentives. The government wants you to take certain action. That's why a lot of these loopholes, like bonus depreciation, like write-offs, it's available for you because the government wants you to be doing those things. They want you to improve on the property. They want you to provide housing for people. So by doing that, you're actually not causing the problem. You're helping to resolve issues that exist right now in the workplace. And my family, is funny because we just my family and I just had a meeting. We own a couple of condos out in Las Vegas, and with COVID, back in 2020, a lot of tenants were, didn't really have money, and but kind of just knowing the stories, and as landlords, we're not all about just making money. We also understand their people, and we do what we can to help them out. The tenants who are in our properties as well. So I think sometimes real estate investors sort of get a bad reputation on being greedy and things like that, but that's definitely not the majority of people that I see or I work with at all.
I actually just looked it up. While we were sitting here live, Los Angeles actually ended up spending $837,000 per unit. Can you imagine for homeless? And yet I
wonder what those look like.
I know, who wouldn't want one, right? I do have a friend in the business who is building, his whole mission for being an investor is to build housing for veterans, and he's going to do it. He's already doing it, and he's doing it for a lot less than that. So just anyone listening, that's concerned about investors taking tax breaks, just know that there's some really good people out there doing good things. Yeah.
Yeah. And, as an investor, I mean, we're investors too, right? So one of the things that most investors do when they save taxes, if I have a client who saved, let's say even $20,000, $30,000, $40,000 in taxes, what are they going to do with that money? They're not going to go out and buy a big diamond ring, or they're not going to go on this fancy vacation. Most of them are going to use that. First thing that comes to their mind, most of them is going to say, oh my gosh, I can buy another property with it, right? So they're reinvesting that savings back into real estate too.
And improving it. Housing, it gets dilapidated very quickly, along with neighborhoods, if those homes aren't cared for and kept up, and investors are improving neighborhoods and improving the lifestyle of people who live there, whether they're renters or owners. Yeah. Okay. Well, Amanda, it's been wonderful having you here. Just real quick, I know you've got so much to do, but just if you would just tell our audience, what are some of the best reasons to invest in real estate from a tax perspective today?
Oh my gosh, we have 2 hours.
Well, you have seminars where you teach it, so you can send people there, but just a few top highlights.
Yeah, I mean, I think regardless of how, active or passive you are in real estate, one of the biggest benefits, of course, is depreciation, right? We get to write off part of the purchase price of the property year over year using depreciation, which again is allowed by the IRS. And what's so interesting about depreciation is that it's based on the purchase price. Not based on down payment, not based on, so whether you buy a property all cash or you buy it with no money down, you're probably going to get very similar depreciation. So essentially, you're getting to take a tax deduction on borrowed money as well, and that's something that you really don't get, in a lot of different asset classes, right? Like if you buy stocks, there's not really depreciation on that. And of course, just building up equity. As our equity increases, at least based on current law, as long as we don't sell the property, we do get to utilize that money without paying taxes. If my property appreciates by $100,000, I can tap into that equity with a cash out refi or a HELOC, and I don't have to pay any current taxes on the cash that I get. And so those are, just two of the many reasons why real estate investment is really good from a tax perspective. When people look at, I think there was an article in the New York Times back in December talking about how, I think it was Michael Bloomberg, Jeff Bezos, a lot of those people that made a lot of money and pay very little taxes. And it was funny because some of the strategies, these advanced strategies that these super wealthy people use are really the same as a lot of the everyday real estate investor, talking about how to access equity and not pay taxes and how to write off interest. These are a lot of the day-to-day stuff that even an investor with one single family home is using, right? So definitely, at least my 2 cents in terms of, why real estate is good from a tax perspective.
That's wonderful. All right. Well, Amanda, it's been wonderful to have you here on the Real Wealth Show. I look forward to having you back with updates. Again, my personal opinion on the potential tax changes in 2022 is that there's an election coming up. So I just imagine it wouldn't happen this year. Maybe next, but I don't see the changes happening this year.
Yeah, I mean, I agree. I think because they had such a hard time passing it, at the end of last year, that nothing really has changed to make it easier to pass. I think that would be a good thing. Let the investors utilize the strategies as they currently exist, and hopefully make things better in the coming years.
All right. Thank you, Amanda.
Yeah, thanks for having me.
And thank you for joining me here on The Real Wealth Show. If you go to realwealthshow.com, we have dozens of free webinars from tax experts who specialize in working with real estate investors. They have done hours and hours of videos. You don't have to listen to all of them, but there's enough information there to really help you on your way to dramatically cut down on your taxes. Again, that's realwealthshow.com. It's free to join and free to watch those webinars. So why wouldn't you? All right, see you next time.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.